What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Make sure you hit that subscribe and notification buttons as well. It means a lot to small YouTube channels like ours. It really helps us grow. Thanks to all those who continue to tune, and welcome to all those who are new to the channel. If you are new to the channel, we do challenge you to go back and look at any of our past videos and see how they stack up against what happened in the market the following day. Now, the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts and our trading levels, broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. And for more information about the STRAT, which is the base of our charting and trading method, you can find more information in the description of this video. A free quick reference PDF guide is in there, and some other references. Again, you don't need to understand the STRAT, which is the base of our charting method. We do have other layers on top of that, nuanced layers on top of that, so you can still follow our price breakdown and analysis in these videos, but we do encourage those who are not familiar with the STRAT to go check it out. So just getting into the agenda for today's video, we'll go ahead and recap the price action from today, Monday, June 9th. Before we zoom out like we always do, take a look at the week, month, quarter, and year price action. Then we'll zoom back in, take a look at what we call our 4-hour markers and the triggers and targets for Tuesday, June 10th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so let's go ahead and go to the charts, and starting with the 5-minute, like we always do. This is how we take advantage of our proven and repeatable strategy. That is looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high day. And then if we get lower highs at or below opening print, then we're looking to get into puts, targeting overnight low and previous low a day. So here is today's price action. Now you can see we did have an inside day today. So previous low day is down here, previous high day is up here. We had overnight high up here, and actually overnight low was actually down below previous low a day. So that's how it looks from a wide perspective. Again, SOXL has been having some pretty big moves intraday, so that's why at this point this looks like a very consolidated price action. And again, it was an inside day, but we did get close to the market maker's expected move high for the week. If you're not familiar with this, make sure you check out our weekend video where we dive deeper into this. And we can see here that because we opened inside previous day's action, but right at overnight high, that the only target to the upside was previous high a day for the proven and repeatable strategy. Now here we could see on the 5-minute, we did get this higher low, but it was below opening print. So that's obviously not the trigger we're looking for. Looking for higher lows at or above opening print to get into calls. Now you could have taken this knowing that you would have had some added risk to this, and as long as you had a tight stop just at or below this candle's low, then maybe it's a risk that you'd like to take, knowing that we are in this pretty big uptrend, even with the pullback that we had on Friday, right? Some people say that that was the pullback that we needed to continue this uptrend. So you could have taken that again with some added risk, but we did go higher high. So now we're just looking for a higher low at or above opening print. Obviously, we're right at opening print, so it would have been hard to get above opening print. But if we could get something around here, again, a little bit below opening print does give a little bit of added risk, but it's something that we would be welcome to. But we got the bigger pullback for the lower low. Now we went higher high to lower low, so we've got like a broadening formation going on, and now we need to see which side of the equation that we're going to do. Are we going to continue to broaden the formation to the downside, or are we going to go back to the upside? We did come through here and get the lower high, but then higher low. And also, if you bring into the picture the QQQ internals, you can see the tick opened above zero line, going between zero line and the trend higher zone. Vol QD, or basically money coming in, opened up decently high and was pushing up towards the trend higher zone. 80QD, which is market breadth, opened up at the trend higher zone and continued, had the quick drop at the open, but continued to push up. So early on in the morning, we do see, momentum gaining on the bulls side. And then if we just switch out to the 15-minute real quick, we can see that this morning we were just putting in a higher low, right? So what we did do is we did take this higher low on the 15-minute. Again, it's below opening print, so it technically, isn't the trigger that we're looking for. We are looking for something above opening print, but at this point we're looking at this first hour of trading, or first 45 minutes at this point, as the opening range, as we opened up, we pulled back, and now it looked as though we were pushing back up. It looked like this was going to be our opening range, so we wanted to take, from the middle of the opening range back to the top, and then take anything above, right? Especially if we could make a higher low. So we took the higher low on the 15, slightly below opening print, went ahead and we went up, made a higher high, higher low, but then ultimately made a lower high, soft lower high again, and then came down and made the lower low. So we went ahead and we had a stop here on half of the position, and got stopped out. So decent profit that we got here from 208 to 214, so, or 215, about, yeah, 215. So decent profit there. But then once we got the lower high, lower low again, we went ahead and exited the rest of the position, noticing that, let's look here on like the 4 hour, right? If we go to the 4 hour, look at Friday, that was huge. So most likely we were going to have an inside day, unless we had some type of, unless we opened towards the low of Friday, which, then threatens closing that gap. But if we opened up mid or higher, then we, very good chance of running an inside day. So went ahead and stopped out of the rest of the position with the lower high, lower low on the 15-minute. And then kind of watch the rest of the day kind of fade off. So didn't play anything to the downside. Obviously, was the opportunity there, both in this little downdraft, but also here we had this soft lower high here, and then dropped out to make the lower low, soft lower high. Hadn't quite made the lower low before the day closed, but did end the day in a 15-minute downtrend. So there was an opportunity. If you were a scalper, maybe you went ahead and jumped on those. If you did, congratulations. But yeah, there was an opportunity to the upside and downside. We did just happen to capitalize on the upside. Again, kind of going with full time frame continuity. Now we were slightly below the flip for the month, but just slightly. So knew that we could flip that back green, and as soon as it went back green, we would have the day, the week, the month, the quarter, and the year all back green. So we knew that there would have been obviously momentum with the bulls. Thought we were going to get this higher low, higher high here to continue on up to at least market makers expected move high. Maybe that's on the table for tomorrow. But again, we did end the day with the lower high on the 15. Starting the downtrend. If we look at the 1 hour, we did make a lower high here as well, pushing down. We've made a lower low in comparison to this 2 down, but haven't, we didn't, go back down to the day, the low of the day or anything like that. So plenty of opportunity for this just to be setting up a lower high on the 4 hour, right? We got set up with the 1. Let's get it cleaner. There we go. We had a 1 on the day, or an inside candle. So it could be setting up, on the 4 hour. So it could be setting up a 1, 2 down, 2 up reversal, which would take us back up to at least Monday's high, which would then, keep us in this 2 down combo, 2 up, which should put us back up to Friday's high, right? So that's if we get the continued momentum for the bulls. Again, this pullback, after a run up from, what was this, 140 to 270. I mean, come on, that's $70. We got to have some type of pullback. So you can see it pulled back right to where what was resistance, making the support, which is another sign of an uptrend, right? Turning what was previous resistance into support. So from the 4 hour perspective, things are still looking good there. Oops, let me get a cleaner chart here. If we go to the day, right, we can see we did make a lower low on the day, but again, coming from a higher high, so we've just got a broadening formation so far. Should we push up tomorrow, even if we get that 1, 2 down, 2 up, to go 2 up on the day tomorrow? Where's our tools here? All right, oops, there we go. Right, we would have this broadening formation type of situation here, right? High to higher high. Come on. There we go, and high to higher high. So you can see we've got this broadening formation, right? And then we're, have the same type of situation that we had intraday. We established a high and a low. we're starting to push back up. Are we going to continue to push back to the top of the broadening formation and continue to extend, broaden it to the upside, or are we going to hit that mid, 50% level here that we're could have the possibility of running into tomorrow, right? Should we go 2 up? Maybe we go failed 2 up on the day. We push up, we hit that 50% level, mid broadening formation, and get like an inverted hammer. That would be setting up a 1, 2 up, 2 down on the day. For Wednesday to go 2 down back to Friday's lows and possibly close this gap down here and then extend the broadening formation to the downside, right? So still, we're inside on the week, went inside on the day. So a lot of indecision at this point. Well, not a lot of indecision. We had a big move last week, from the upside to the downside. So, kind of have no choice but to be an inside day today, unless we had another huge day. But I mean, look at this. We went from 286 to 180, so $100 in 3 days. The market has to kind of digest that move, kind of like how we went from 135 up here to 236. Again, $100, and then we kind of digested it for a couple days going sideways. Could that be what's happening here? We pulled back, and now we're just going to digest this going sideways. We'll see. But we are green on the week. We're still red on the month, right? So we don't have the full time frame continuity to the upside. We got to flip that month back green so that we've got the week, month, quarter, and year green. And then we'll have that full momentum back with the bulls. So don't have far to go to flip it back to the upside, flip it back green. But yeah, that's what we've got from, a shorter time frame, intraday price action, right? Inside day. And then below that, we still have the opportunity to, go back to the 4 hour here, right? It's still a broadening formation on the 4 hour as well. So we did put in even if we go 2 down tomorrow and make this a lower high, there's still an opportunity that we could put in a higher low, and this could be the change of the trend, right? We got to put in that lower high to get that higher low, and then we push up and maybe we get that higher high, higher low, higher high, and then that's how we expand the broadening formation to the upside. But inside day, finished the second 4 hour candle of today inside as well. So definitely going to have to be patient going into tomorrow. All right. From the weekly perspective, right, just like inside on the day, inside on the week as well. It was a huge week last week. Again, the high was 284 and the low was 181. So went $100 in a week, right? Really, and it was those 3 days that we just talked about: Wednesday, Thursday, Friday. So, got to keep an eye, even if we go 2 down this week, go fill this gap. How do we finish the week? Is it a hammer or a solid red candle? If we got a solid red candle, then chances are we could be continuing to pull back a little bit more, maybe looking for this level here around 130 flat, right? There's another gap right here that could get filled. Treat what was resistance at least for a couple weeks, and to turn that into support here, and maybe get that bounce back to the upside. Again, we're just, even if we go lower low on the week, right below this 3, we're coming from a higher high. So we're just making a broadening formation at the high of this move that we've made since the end of March. So nothing is breaking down from a higher time perspective. Not even from the 1 hour and 4 hour. We're just in broadening formations. 15-minute is in a downtrend, but a lot of times you've got to go into a downtrend on the 15-minute to put in that low on the 1 hour or 4 hour. In this case, it could be the day that needs to be put in, the 2 down tomorrow for that 1, 2 down, 2 up. But we'll see. On the week, still nothing breaking down inside. From the month perspective, we did turn back red like we talked about, but it's a doji for right now. More towards the inverted hammer than just the doji with the price action directly in the middle of the candle. So more wick to the upside than to the downside, but not an inverted hammer by any means at this point. And we've still got the whole month to go, so this still could go either way. The main thing is we did go 2 up already, so continuing this higher low, higher high trend. Again, we've reached the furthest broadening formation that we have in recent times. There's nothing back here in the price action that's going to give us a broadening formation that's going to reach up to where we are right now. So just keep that in mind as we continue to try to push up, right? This could be where we pull back a little bit. Maybe we've got to go, pull back on the month. Maybe we get the inverted hammer, and then in July we get some type of hammer, where we poke 2 down, but then come back up by the end of the month, and that's our higher low in the month, and then we continue to push up. That is a possibility, but for right now on the month, again, nothing breaking down. It's the candle leans more bearish at this particular time, but again, it's the very beginning of the month. We've got the whole month to go, so continue to just watch it. The quarter, not much to say here, right? Just basically straight up. We are starting to get more of a wick at the top, but again, we're pressing this quarterly broadening formation, this yellow one. So it makes sense that we would pull back after popping out above it. Now we are coming from a lower low on the quarterly perspective, so we are in a broadening formation. After making a higher high, we went and made a lower low. So keep that in mind. We expanded the broadening formation to the upside. Do I think we're going to go back and expand the broadening formation to the downside, go basically back to zero, because we were at $7 when we bounced in April of 2025? I don't think that's going to happen right now, but you can see all these turquoise lines, those are gaps, right? So we've got plenty of gaps to the downside, which can act as magnets on price action. A lot of thin structure, especially on the day, week, from this big run up. So a lot of room to pull back, but for right now on the higher time frames, nothing breaking down. And then again on the year, there's not a whole lot to say here. It's just like the quarter. We've already run the STRAT that the STRAT reversal that was set up at the beginning of the year, right? 2025 went 2 down, but it was a failed 2 down, and we went 2 up in January. The magnitude for that move was just right here at 70.08, and then hopefully the all-time high up there at 74, but we've obviously blasted past that, gone up to 280 already, 284, and we're back at 211. So again, very bullish on the year, but we are establishing a little bit more of a wick on the top, but plenty more, half of the year left still to go. So just keep your eye on that and see how it finishes, right? Let's go ahead and jump into the 5-minute. Let's start looking at tomorrow, how we want to attack the day. Let's get this. All right, auto, there we go. All right, so we want to employ our proven and repeatable strategy, right? And for that, we need what we call our 4-hour markers. That is the previous high a day, overnight high, overnight low, and previous low a day, right? Honorable mentions here are market maker's expected move high, which is 224.53. Again, if you're not familiar with that level, make sure you check out our weekend video where we dive deeper into that for you. And then also the week flip, which is here at 210.62, which is just barely above barely below where we closed, right? And actually in after hours, we've already seen price go down to that 207 level. And actually we're down there right now, 207.62. So let's just say that, overnight high, let's just say we get choppy action. Let's say overnight high goes up to the month flip, and let's say overnight low goes down here more towards previous low a day. And let's get the right tool out here. And let's just say that price opens somewhere around the week flip, in between overnight high and overnight low. This does set us up, for a good opportunity both to the upside and downside. Should we open right here and we push up, maybe get a little bit of a rejection here and pull back, but ultimately make a higher low on like the 5-minute or 15-minute chart, or maybe even the 1 hour, then we want to look to get into calls, right? So higher lows at or above opening print, you want to look for calls. You want to target overnight high and previous high a day. All right. Same thing in reverse to the downside. If we open here and we push down, maybe get a little of a bounce, but ultimately get a lower high on the 5 or 15 minute, then we want to look to get into puts, targeting overnight low and previous low day. Right. So higher lows at or above opening print, look to get into calls, targeting overnight high, previous high a day. Lower highs at or below opening print, you want to look to get into puts, targeting overnight low and previous low day. Again, market maker's expected move high is 224.53. So if we do push through that previous high a day, you do that, have that as another target. It's not part of the proven and repeatable strategy, but it's obviously a point of interest there on the week's price action. So along with that, we look at our 4-hour and 1 day triggers and targets here in a minute. But for the proven and repeatable strategy, overnight high, previous high day, overnight low, previous low day are the targets, right? If we just look at the 4-hour here, looking at things from more of a intraday or day trade perspective. Oops, what's going on with that? There we go. Let's get the right chart out. There we go. All right. So again, on the 4 hour, we did have the 2 and then 1 on Monday. So 2 down, 2 up did trigger. Magnitude of that move is the high of the candle to the left of the 2 down. So it would have been up here at 233.69. Obviously, didn't quite make it there. Market makers' expected move isn't even that high. So, if we do get above that, it's, goes into that 30% of the time when market makers' expected move isn't correct, or we go outside the market maker's expected move. That would be this case. So we do want to kind of watch and see, are we going to get the lower high? Are we going to go 2 down in that first 4 hour and make this 2 up from Monday morning? Is that going to be the lower high on the 4 hour and continue this downtrend? Because, obviously we have this higher low, but then lower high, lower low. So we've already started a downtrend on the 4 hour. Is this just continuing it? Even if we go 2 up tomorrow in the first 4 hour, you got to see, do we go higher high in comparison to this 2? And even then, that's just really a combo 2 up, right? We have this 2 up, this 1, and then another 2 up that would all combine to be a 2 up on this 2 down right here. So it would still just be a 2 down combo 2 up, magnitude again being the high of this candle right here. And even if we do go reach magnitude, do we pull back at that point? Because we'd have to get all the way up here to 274 in order to create a higher high. So we can still go 2 up on the 4 hour, even go higher than Monday's high, and still be making a lower high on the 4 hour time frame. Right now, again, if we go 2 up on the first 4 hour, watch for that 1, 2 up, 2 down combo that would take you back down to the low of Monday. If we go 2 down in that first 4 hour, watch for the 1, 2 down, 2 up combo that would take you back up to the high of Monday. So still price, from a 4 hour perspective, from a STRAT perspective, even with the reversal, or magnitude to the upside and magnitude to the downside, would keep it an inside day. So we'll see if it goes past those magnitudes. If it does, then obviously, we'll see that here on the day chart, and we'll talk about those triggers and targets. But 2 1 2 up possibility, or 2 1 2 down possibility in that first 4 hour, and then watch how that first 4 hour finishes. Right, if you get that inverted hammer, good possibility of the 1 2 up 2 down. If you get the a hammer on the 2 down, then there's a good possibility of a 1 2 down 2 up. All right, looking at things from a day perspective, we had the inside day like we talked about earlier. Should we go to the upside, then it is a 2 1 2 up. 2 1 2 up. So you enter at the high of the 1, exit at the high of the 2. If we go to the downside, then it's a 2 1 2 down reversal, or continuation in this case, because it was a 2 down to begin with. So 2 down, 1 2 down. Enter at the low of the 1, exit at the low of the 2. Keep in mind, we do have this gap over here from last week as well, so we could go a little bit further than the 2, right? On the week, real quick, we'll just touch on this because it is still an inside week, but got a long ways to go if we're going to go 2 up on the week. So we'll call that out as we approach it. It's way above the market maker's expected move high, so don't know that we're going to get above that. And then, not as far to go to the downside for the 3 down. Could do that. I'm sorry, for the 2 down. Could do that in one day. And if that does happen, then what we want to watch through the rest of the week. How's that turn out? Is it a solid red candle, or is it a hammer that could indicate we're going to go 3 2 down and then 2 up next week? That would have a magnitude back up to all-time highs. Right. Let's go ahead and switch to the notes at this point. We've looked at the charts quite a bit. So for Tuesday, June 9th, 2026, there'll be 142 trading days left in 2026. And we know that the close on Monday, June 8th, was $211.44. We know that the week opened at 211.62. So, this is actually, we got to make this green. And, oops, come on. Got to change this because the month is red. Got to turn this to green. All right, so we can see that the week would turn red at 210.62. The month turns back green at 217.27, and then the quarter and the year obviously turn red back down, way back further down from where we are right now. So don't need to really worry about those. Again, the market maker's expected move is plus or minus $41.99 from the close price on Friday. So that gives us a range of 224.53 to 140.55. Obviously, that's only, well, not obviously, if you're not familiar with that, if you're not familiar with this market maker's expected move, it's right about 70% of the time. It's based off of the options chains, the at the money straddle plus the in the money strangle divided by 2, and that's what gives you your expected move. But we do, I think, have a good chance of going above the market maker's expected move this week. We'll see. No gaps above, but we do have some gaps below, quite a few actually. So we always like to keep those in our notes, keep those on mind. And then we know from a scalping, early morning scalping perspective or early entry into longer day trade, we want to look for higher lows at or above opening print to get into calls and lower highs at or below opening print to get into puts. From the 4 hour, we talked about the 212 down possibility triggering at 208.93, magnitude being 201.69. Intermediate target there in case we don't get to the downside. If we continue this uptrend and put in some type of higher low on the 4 hour, we look at 204 flat as a possible bounce point. If we do reach magnitude of 201.69 and still have magnitude, we've got a couple extended targets there for you. And then to the upside, we have that 212 up triggering at 219.53, magnitude being 222.19. And then we've got some extended targets out here should we continue with some momentum, right? On the day, we have the 212 down possibility triggering at 201.69, magnitude being all the way at 181.81. So long ways down to go. So we have some intermediate targets here for you where price could either bounce or go sideways. Should we reach this magnitude, which is a pretty big magnitude, we do have some extended targets, including that gap close, which isn't too far away, which, if we reach magnitude there, why wouldn't we go close the gap? So we do expect that gap could get closed should we get down to the 212 down magnitude on the day. Now, if we go to the upside, that does trigger at 222.19, magnitude of 233.69. So we've got a couple of intermediate targets here for you because we have put in that lower low on the 4 hour and on the day. Again, we are coming from higher highs, so it is just a broadening formation. It's not a downtrend. But we do just have to keep in mind that we may not, go make a higher high. We could be putting in a lower high and really turning that trend to the downside. If we do reach the magnitude of 233.69, we've got momentum still. We've got a couple extended targets out here for you. And then on the week, we are inside. So if we go 2 down on the week, we've got to get below 181.81, which shouldn't be too big of a deal because that is the magnitude on the day. So with the gap right below there, I could see us going 2 down on the week easily. But again, watch to see, do we make a hammer or is it just a solid red candle, right? Because that hammer could indicate we're going to go 3, 2 down, 2 up next week. To the upside, we go 2 up at 284.58, so we've got a long ways to go before that triggers. We'll talk about the targets a little bit more should we reach or get closer to that 284 level. On the month we talked about previously, we've gone 2 up, 2 up. Again, hit one of our targets, and then just looking to hit some of these extended targets out here as well. Got a full month left. The quarter. This is the last month of the quarter, so we will finish it out. We want to see how we finish it. We know we went 2 up, but is it going to be an inverted hammer? Maybe just a good, nice size solid candle with a big wick on the top, or is it just going to be a big solid green candle? Are we going to finish the quarter like we started it and pushing to the highs? Right. We've got to just keep an eye on that. And then on the year, again, we talked about it. We went 2 down, 2 up, triggering at 50.76. Magnitude was 70.08. We obviously hit that, and we've gone way past that. So we do have some extended targets, but again, we've got to get back up to at least triggering the 2 up on the week before we can start to look at any of those extended targets there. So patience is going to be the name of the game. We'll go ahead and wrap it up here. We hope you enjoyed this video. We put in as much information as we could in without taking up too much of your time. So if you did enjoy the video, thumbs up goes a long way. Make sure you subscribe to the channel if you're not already subscribed. We do appreciate you joining in, and make sure you leave a comment if you have any questions or any comments for us. But yeah, we'll go ahead and wrap it up here like we normally do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Tuesday morning or Tuesday during the day, we hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.